Hey everyone, I'm Carly Ann with the Parsons Entrepreneur Academy. Thanks for joining us for our monthly office hour series, where we invite successful and inspiring entrepreneurs and industry leaders to share their stories, insights, and the lessons they've learned along the way. For anyone who's joining us for the first time, the Parsons Entrepreneur Academy is a platform that empowers creative entrepreneurs like yourself to build sustainable businesses around your art. And we achieve this through our 3 pillars that include mentoring, training, and community. So if you want to find out more about our platform, please visit parsonsentrepreneur.com to learn more about it. You could click on the link in the chat if you wanted to check it out later. All right, so tonight we're very excited to be working with our wonderful partner for the first time, Collective, to bring you this webinar. So Collective is on a mission to redefine the way self-employed people work by giving businesses of one the tools and team they need to focus on their passion and not their paperwork. All right, Collective handles company formation, taxes, accounting, bookkeeping, and more. Collective members save an average of $9,000 a year. All right, $9,000 a year. It's amazing. So tonight, I am happy to welcome back Andi Smiles, who is the head of content at Collective. Andi is also a friend and course author at PEA. So if you are a regular at our webinars, you've probably attended a webinar that Andi's hosted before. But tonight, as head of content at Collective, Andi is going to be leading a webinar to teach you how S-Corps can save creatives like you thousands of dollars on your taxes. So a little bit about Andi, if you're joining for the first time and you're just meeting her today. So Andi started her career as a small business financial consultant, teaching businesses of one to take control of their finances, to build more authentic and sustainable businesses. She's helped thousands of self-employed folks organize and understand their business finances while also uncovering their emotional relationship with money. And as mentioned, she's one of our amazing course authors at Parsons Entrepreneur Academy. So during this webinar, we like to give out freebies at our webinar. So right now, we are dropping a link to your very own ebook that was gifted by Collective, and it's titled S-Corps, the best business structure you've never heard of. You're about to hear about it tonight. And this is a guide to save you thousands every year on your taxes. So please look out for that link right now and download it and set it aside to revisit later because we have more offers coming up. So download it now so it doesn't get lost in the chat. And after the webinar or toward the end of the webinar, we're also going to be providing a code that you can use to get the first 2 months of the Collective service for free during the month of November. So until November 30th, you can use this code and get Collective service for the first 2 months for free. So stick around till the end. We'll be providing you with the code to redeem that, and we'll have some additional offers as well. All right. So in tonight's webinar, Andi is going to explain how self-employed creatives are taxed and why your taxes are so expensive. She's also going to show you how an S-Corp could seriously lower your annual tax bill. And she's also going to break down the differences between an S-Corp, LLC, and sole proprietorship, and help you decide which is best for you. She'll also share 3 things you need to do to start your very own S-Corp. So Andi's gonna present for 50 to 60 minutes on this topic. And as Andi is presenting, if you have any questions, please put them in the Q&A box. You can find the Q&A function at the bottom of your Zoom window. Please put your questions there. Don't put them in the chat. Only the questions in the Q&A box will be addressed. So please put them there. If you see questions that resonate with things that you're curious about, you can hit the like button on that question. The questions that get the most likes get pushed to the top, and Andi will address those questions first. If there are any questions that come up that are relevant to something that Andi just talked about, she might address something that's relevant. Beyond that, most of the questions will be taken toward the end. So please put them in that Q&A box. All right. So now I'm going to stop talking and I'm going to hand it over to Andi, the expert, to jump in and go into detail about how S-Corps can save you thousands of dollars on your taxes. Hey, Andi.
Hi, thanks so much for the wonderful introduction, Carly-Ann. Hi, everybody. Thank you for joining me to talk about S-Corps, one of my favorite topics, and I am pretty sure after this presentation, it'll be one of your favorite topics too. So I'm just gonna get my screen sharing going. All right, so I won't go too deep over the agenda today because Carly-Ann did a great job of covering what we're going to talk about. But basically, yes, we're talking about a lot to do with self-employed taxes, LLCs and S-Corps, how to know which one's the right one for you, and then how to get started with an S-Corp if you do decide that it's the right fit for you. As Carly-Ann mentioned, I am the head of content at Collective. I just wanted to give you a little bit more context about what Collective does. So Collective is the first all-in-one back office platform designed for self-employed people. So I know that that's a lot of words and probably you're like, cool, what does that mean? So here's how I like to break it down. This is your money when you're self-employed, which is basically that there are a lot of things you need to keep track of and a lot of things that you need to know as a self-employed person, right? You got your taxes, you have to set up your business somehow, you have bookkeeping, which you probably are like, oh, I've heard that saying, I'm not quite into doing that. You have those estimated taxes. You have to think about your retirement and your health insurance and just like ongoing compliance. There's a lot to think about and it can feel like very disparate. Like there's like stuff just kind of like floating around your head and you're like, wait, how do I like make sense of all this? It can get even harder when you need to make financial decisions because what you'll start to see is that actually all of these little bubbles that are floating around when you're self-employed, they actually need to talk to each other and they all connect with each other in some way. And when they're in like sort of disparate parts, it can be extremely confusing for you. So at Collective, when we say we are an all-in-one financial platform for self-employed people, basically what we're doing is we're taking all of these things, all of these financial parts in your business that are sort of floating around, and we're bringing them all together into one platform. So we're centralizing your self-employed finances, and we're not just software. We have a team of real people, real financial pros, our tax, bookkeeping, accounting team. They're all lovely, lovely humans who are assigned to your business. So there are real people working behind the scenes in this centralized platform. So I'll get into more details about Collective towards the end of the webinar, but I just wanted to give you that context. Okay, so let's talk about self-employed taxes. What's up with self-employed taxes and why do they cost you so much? Well, before we talk about why they're so expensive, we want to sort of like understand what are the taxes that you need to pay as a self-employed person. So self-employed people pay two types of taxes. First, you pay income tax. Now, income tax is what most people think of when someone says taxes. And pretty much if you're earning money in the United States, you're probably paying income tax. So it doesn't matter if you're self-employed or an employee, income tax is kind of a fact of life. Now, individuals in the US pay between 0 to 37% in income tax, and it's based on brackets. So you may have heard the term tax brackets. That's what we're talking about here. And the US has what's called a progressive tax system. And basically what that means is that you don't pay a flat percentage of tax on all of your taxable income. So for example, if you're in the 22% tax bracket, you don't just pay 22% on all the money that you earn. Instead, it progresses up. So you will pay 10% on the first chunk of money that you earn. And then you'll pay, 15% on the next chunk, you'll pay 20% on the next chunk, and then that final chunk, you'll pay 22%. So Income tax is kind of tricky because it isn't so easy from like a math point of view where you're like, oh, this is how much money I earned and I'm going to multiply that by my tax bracket. It's a little bit more complicated, but the good thing about it being a little bit more complicated is it actually benefits you from a tax perspective, right? Because through this progressive tax system, you're not actually paying your tax bracket amount on everything, right? So it actually helps lower your taxes in the long run. So a little bit more complicated, but beneficial to us, especially as self-employed people, because there's another tax that self-employed people pay, and that is self-employment tax. So self-employment tax is very different from income tax in the sense is that it is a flat rate of 15.3% on most of your business profits. And this 15.3% is going towards your Social Security and your Medicare. So you are actually paying into your Social Security and Medicare via self-employment tax. Now, here is the big difference of being a self-employed person versus being an employee. When you are an employee, your employer pays half of this 15.3%. That's called payroll taxes in employer world. It's still 15.3%, but as an employee, so when you get that paycheck and your W-2 job, half of that 15.3% is paid by the employer and half of it is paid by you. If you used to get a paycheck, you remember there's a little area that says what your withholdings are and there's Social Security and Medicare, that's your half being withdrawn from your paycheck. So you're only footing half the bill as an employee. But when you are self-employed, right, you are self-employed. There is no employer. So now you are paying that full 15.3%. So if you ever, started becoming self-employed and you're like, it feels like my taxes have doubled, what is happening? Well, it's because your self-employment tax has doubled. Yes, it is a lot more. So let's look at this visually as well to kind of really understand the difference for being an employee versus an employer. So here is what your Social Security and Medicare taxes look like when you're an employee, right? So we have this person, in total, their Social Security and Medicare taxes are $15,000. The employer is going to pay $7,500 and the employee is going to pay $7,500. But we see here when they're self-employed, they are on the hook for that entire $15,000, right? And going from $7,500 to $15,000 is a pretty big jump. So again, this is part of what's driving that piece of self-employed taxes that is so expensive. Okay, so now that we know why self-employed taxes are so expensive, let's talk about how you're taxed when you're self-employed. So if you're self-employed and you are a sole proprietorship or a single member LLC, which we're going to talk in depth about both of those in a little bit. So don't worry if you're like wait, LLC, aren't we supposed to talk about that too? We're going to get into it. But I just want to share the basic tax structure for you so you can understand how you're probably being taxed now if you're one of those two things. And then when we talk about S-Corps, you'll see why there's a difference and how it can help save you money on taxes. Okay, so self-employed person, right? You have revenues, the money that you earn, and you have your tax deductions, right? So this is the money that you spend to run your business. What's left when you subtract your tax deductions from your revenue is your net income. If this is a positive number, we call this profit. And if this is a negative number, we call this a loss. Now, regardless of if you have a profit or loss, that profit or loss is going to pass through to your tax return, right? So that money is going to move through from the business to your personal tax return. And then, as we've already talked about, we've got that self-employment tax, right? So you have that profit coming down onto your personal tax return, and then you pay that 15.3% on most of those profits. Then we have the income tax. Now, income tax is a lot more complicated. It is based on all of your business profits plus any other income you have. So if you have a W-2 job, it would include that. If you file your taxes with somebody else, it would include their income, right? It's basically all income. And then you subtract personal adjustments. And then you subtract either the standard deduction or itemized deduction, depending which of these that you take. That is what your income tax is based on. Now, I'm not showing you this because I expect you to become an expert in income tax. I more want to show this to you so you understand that taxes are not as simple as like giving someone easy equation to follow, because everyone's tax situation is very, very different, especially on the income tax side of things, right? So don't worry if you're like, I have to add all that up yourself. You don't have to do all that work yourself on income tax. It's more to give you some visibility into where these numbers are coming from. Really, the key takeaway here is that when you're self-employed, you pay both of these taxes, right? It's not one or the other. It's not whichever one's more or less. It's the two combined, and it can be quite a bit. Okay. So why does all this stuff matter, right? Why are we at an S-Corp webinar talking about self-employed taxes? Well, because how your tax differs if you're an LLC or an S-Corp. So we're kind of just establishing a baseline. So let's talk about what's an LLC. All right, so before we talk about an LLC, we got to talk about legal structures. So legal structures, we often call entities, right? So we'll call something an entity. That's another way of saying a legal structure. And basically, an entity is formed in a state with the security of state. So an LLC is a type of entity, and you don't form an LLC under like the IRS or the federal government. An LLC is always formed on a state level, and then it's subject to the rules of the state that it's formed in. So what do you need to do to form an entity? Well, generally, entities are required to register with the Secretary of State in their state, right? So you have to we call it formally organize, like really organize with your state. And then entities are required to file annual reports with the state, letting them know who manages the entity. It's really important to know that this is not your tax return. So all of this paperwork that's happening on the state level is really not related to your federal tax return at all. This is about managing the entity. And these formation and information returns are done with the Secretary of State. And again, this is usually a totally different taxing authority than, or different agency than your taxing authority. So kind of like, what does this all boil down to? When you form an entity, there's more paperwork involved. So you might be thinking, wait, I haven't done any paperwork. Like, what are you talking about? Like, I've done nothing. I'm just here being self-employed. I'm like this creative. What does it mean if I didn't start? What if I don't have a legal structure? What if I didn't do all that with the Secretary of State? Well, then you're a sole proprietorship. So if you're earning self-employment income and you have not formally organized your business under your state, then you by default have become a sole proprietor. And there's nothing you need to do. You don't need to do anything else to be a sole proprietor. You just are a sole proprietor. But here's the thing you should know about what it means to be a sole proprietor. When you are a sole proprietor, legally, you and your business are one. And so what this means is, from a legal perspective, there is no separation between your personal and your business assets, right? So I always think of it as like, when you are a sole proprietor, this is your personal assets and your business assets. They're like this. They are intertwined under the eyes of the law. And your business profits are passed on to you, the individual. So remember when we were going through that tax structure and I was saying that those profits flow down to you, that's what's happening as a sole proprietorship. Now, you don't need to file an annual return with your state. That, again, we're not talking about tax returns. We're talking about entity-related returns. So your state might still require that you file an income tax return, but you don't have to file an entity annual return with your state. So being a sole proprietor is a little bit less to do. But there is one thing that's tough about being a sole proprietor, which is that there's no separation between your business and your personal assets. So let's talk about LLC basics. When you want to form an LLC, the first thing is that it requires registration with your state. It requires ongoing state reporting and sometimes annual state fees. Now remember, an LLC is formed under your state, so Every state has different things that they want from you. We can't go over every state. So that's why we say sometimes they'll want this. But every LLC requires registration with your state and some sort of annual or ongoing state reporting. Now, here is the thing about an LLC. It gives you limited liability protection from protecting your personal assets from business lawsuits and creditors in most cases. So what this means is, remember when you're a sole proprietorship and everything is intertwined? When you are an LLC, under the eyes of the law, your LLC's assets, which is your business, and your personal assets are separate. Something we call a legal shield. And so by forming the LLC, you're creating a legal shield between the business assets and the personal assets. And what that means is that if your business is sued or you have creditors, they can only, in most cases, go after those business assets. And then you have that shield protecting everything else that you own personally. This is one of the main reasons people form LLCs. Another reason people tend to form LLCs is that it lends credibility to your business. There are some companies that will not work with sole proprietors, and they require that the people that they contract with or work with actually are LLCs. Another reason that people will form LLCs is it allows for multiple members or owners. So as a sole proprietorship, you cannot own your business with someone else. It is a sole proprietorship, right? It is sole. But as an LLC, you can have multiple members, which is just a fancy way of saying owners. And finally, the business profits are passed through to the owner. Now, I see here in the chat that someone has asked about pass-through entity and how does it affect taxes. So I'm going to go over this again. So when we say that the business profits are passed through to the owner, what we mean is that whatever your business makes at the end of the year, so whatever that is, if it's a profit or a loss, so if you have a positive number when you take your revenue minus your expenses, that's profit. If you have a negative number, that's a loss. Whatever it is, that profit or loss is going to pass through to your personal tax return. So the business itself does not file its own tax return or pay taxes itself. This is different from a C-Corp, where the actual business has to pay taxes on the profits at corporate tax rates. There's none of that going on with pass-through entities. It's just you, the owner or owners, if there's multiple people own the business, who are paying taxes on that profit. So what that means and how it impacts your taxes is that if your business makes a profit, you're paying taxes on it, right? It doesn't matter if the money stays in the business or you take the money out. As a sole proprietorship, regardless if you keep it in your business bank account or put it in your personal bank account, the profits will always be passed through onto your own tax return. Okay, here is a really important piece to remember. An LLC is taxed like a sole proprietorship. So by default, the IRS has decided that if you form a single member LLC, they're just going to tax you like a sole proprietorship. Right? So if you've gone from being a sole prop to an LLC and you're like, nothing happened with my taxes, like everything is the same, it's because there is no difference from a tax perspective, unless you ask the IRS to change your tax treatment. So we're going to talk about that in just a moment. But before we do, let's talk about the differences between a sole proprietorship and an LLC. So an LLC requires registration with your state, being a sole prop doesn't. An LLC creates that legal shield between your business and personal assets, which you don't have as a sole prop. An LLC can have multiple owners, which again, sole, you cannot have that as a sole prop. Both a sole proprietorship and an LLC, the business profits are passed through to the owner. So we've talked a lot about this pass-through structure. With a sole proprietorship and an LLC, you pay self-employment tax on profits. Remember, we've talked about that pesky self-employment tax that's like really driving up that tax bill. Now, here is the big thing. Remember in the last slide, I said, unless you ask the IRS to tax you differently, an LLC has something we call tax flexibility. An LLC can ask the IRS to tax it in a different way. You can't do that as a sole proprietor. So as a sole proprietor, you're stuck with the tax structure that you're given. Unless you form an LLC and ask for something different, you're gonna have to stay with that tax structure. But an LLC has tax flexibility and can elect to be taxed as a corporation and also as an S-Corp. So this is where we get into the S-Corp portion of things. So what's an S-Corp? Well, it's harder and it's easier than you think. So fun fact, an S-Corp is not a legal structure. It is not an entity. An S-Corp is a tax election. So remember, the IRS assigns every business structure a default tax treatment. And that's just a fancy way of saying that the IRS decides how every business structure is taxed. Single member LLCs are taxed as sole proprietorships unless they ask differently. So when you elect to be an S-Corp, you're asking the IRS to tax your single member LLC or corporation, if you are formed as a C-Corp, under the rules of an S-Corp. So you're saying to the IRS, I don't really like being taxed as a sole proprietorship. It's too expensive. I want you to tax me as an S-Corp. So why would you do that, right? Like, why are S-Corps so great? Why would you go through all this trouble of changing the way that you're taxed? Well, because S-Corp owners don't pay self-employment tax on their profits, which I know sounds like the most amazing thing ever, but we do have to talk about the rules of S-Corp taxation to put this into context. So there is a catch. And when you are taxed as an S-Corp, it creates an employer and employee relationship between you and your entity. So basically, you want to start splitting yourself in half here. You're thinking, I am the employer and I am the employee. So you are the employer of yourself. I know it's kind of wild, but basically there's like the S-Corp you, that's the employer, the entity, right? That LLC entity with the S-Corp election. And then there's the employee you, that is you working for your own business. And as an employer, right, the employee side of you is required to earn a reasonable compensation from your work via a W-2. So this is via official payroll. So remember, now you are becoming an employee of your business. And you are going to pay payroll taxes on all of those W-2 wages. So that reasonable compensation, you're going to hear me use that word a lot, and that's because that is the word that the IRS uses, is reasonable compensation. That reasonable compensation, AKA this employee salary that you pay yourself, you will pay payroll taxes on. And payroll taxes are 15.3%, just like self-employment tax. So they serve the same function as self-employment tax, which is to pay into your Social Security and Medicare. They're the same amount. The only difference is that they have a different name and they're treated slightly different, because half of those payroll taxes are going to be withheld from employee use paycheck and half become employer payroll tax expenses and a tax deductible expense of your S-Corp, right? So it's back to that slide that we had earlier with the two circles, and one was split in half and one was whole. The whole is when you're self-employed paying self-employment tax. The one that was split in half, right? Well, that's you in your business, and one color is the personal you and one color is the business you. Okay, so we're going to go through how S-Corps are taxed and why this all matters. Like, why am I going on and on about this stuff? You're about to see how this changes your tax bill. But first, this is just a quick reminder of sole proprietorship, single member LLC taxation. So I'm not going to go back over it. It's just kind of to like refresh ourselves. Let's talk about S-Corp taxation. Well, you have your S-Corp revenue, right? The money that you make. Then you have your operating expenses, right? So you have the money that you're earning, the money that you're spending to keep your business operational. And then you have your salary, right? This is the salary that you pay yourself, the reasonable compensation. This is now an expense of your business. And then you have your payroll taxes, that 15.3%. Now, the thing about this 15.3%, on the last slide, it was all the way on the bottom. On this slide, it's up here at the top with salary, because you're only paying these payroll taxes on the salary. So that 15.3% is only on salary, right? And then half of this gets written off by the company as employer taxes, and half of it you personally are paying those taxes. All right, so we have our revenue, then we subtract our salary, subtract our expenses, we subtract our payroll, our employer side of the payroll taxes, and then we have our S-Corp profit or loss. And just like when you are taxed as a sole proprietorship, that profit or loss is going to pass through to your tax return. So we still have that pass-through nature. It's still passing on to you, right? So we still have that. But now you have the profits on your personal tax return and you have your salary because that's your W-2 income. So now your personal income is based on, yes, the profit passed on to you plus the salary. But remember, you only pay 15.3% on the salary and your profits are now lowered because you're subtracting your salary from your revenue. And then just like always, we have income tax because income tax is just going to be income tax, right? Like income tax isn't going to go away, right? And so you pay income tax on the salary plus the profit. Now, at this point, a lot of people start to be like, this seems cool. So like, what if I just don't pay myself a reasonable salary? What if I'm an S-Corp and I'm just like, no salary, then I don't have to pay 15.3% on any of that. Well, first of all, you have to pay yourself a reasonable salary unless your business is like running a loss. Then, there's no expectation for you to pay yourself because there's no money to. But basically, if you have profit in your business and you're an S-Corp, you are required to pay reasonable compensation to yourself. So that's something that is part of the tax structure of an S-Corp and you can't really get around that. The next question people usually ask is, well, how much do I need to pay myself then? Like, what is considered reasonable? And unfortunately, there is no set salary for reasonable compensation, right? It's a facts and circumstances argument. So again, you hear this word reasonable compensation a lot because this is what the IRS uses. And they have not given out any kind of like X percentage of blah, blah, blah. It's not quite how it works. It's really based on facts and circumstances. It's based on your business activities. It's based on your experience. It's based on what you do for your business. It's based on what's market rate for your services. It's based on a lot of different things. That said, it's generally acceptable that between 35 to 45% of the business profits pass the smell test. But again, this is not a formula. This is just what we see at Collective with like the numbers shaking out. Really, with reasonable compensation, the best thing you can do for yourself if you are going to set up an S-Corp is to work with a tax professional to pick out a number. Because what you're looking for, and this is this image I have here on the side, is you want a reasonable compensation that has tax savings, right? Because a lot of this hinges on what you're paying yourself for salary. So you want to benefit from the S-Corp tax structure and the tax savings. But you also want to be within the rules of the IRS, right? So we call it the defensibility to the IRS. So this is actually a screenshot from our Collective dashboard where you can kind of use this cool little slider and see, okay, if I'm expecting to earn $130,000 in profit this year, what would it look like to pay myself a reasonable salary? If I slide it up, basically if you made the slider go up, your defensibility would be great, but your tax savings would go down, right? And if you slid it all the way down, your tax savings would look great, but you would have zero defensibility, right? So it's really striking that balance. And that's something a tax professional can help you do, or at Collective, that's one of the things that we support our members with. So there are a few other additional benefits to an S-Corp. One, there's just more tax deductions, right? So we talked about this. You're writing off your salary now, you're writing off half of those payroll taxes. So that's actually, those tax deductions will actually lower your profits and it will save on all the taxes. With an S-Corp, you also have higher retirement contribution limits because you can form something that's called a 401k, a solo 401k. Sorry, you all are probably like, I know what a 401k is. A solo 401k. And then you can actually contribute to that 401k as an employer and an employee. So S-Corps are really good for people who want to like really fast track their retirement. And then we have tax-free employee reimbursements. So basically through an S-Corp, you can, because again, now you're an employee of your business, you can set up what's called an accountable plan, and that will enable yourself to reimburse the employee you for things like home internet, your cell phone, mileage that you drive with your car, a portion of your home office via the S-Corp in a tax-free way, which again, the more of these like tax deductions that you're able to take, the more of these tax deductions you're able to take are going to lower the profits. So how does the money work? Well, we have our business income, right? So this is like, so people are often like, how do I get money out of the S-Corp for myself, right? Like, how does this all shake out? So we have business income, And then we have our operating expenses, right? So this is kind of like normal for anyone who's in business. And then the way that you, the owner, gets money out is you have your payroll, right? It's that reasonable compensation that you keep hearing me talk about. Then we have distributions, because a lot of times people are like, well, you're saying I need to pay myself this salary, but what I pay myself may not be enough for me to live off of. So how does that work? Well, just like when you're a sole proprietor or a single member LLC, you can take what in those worlds are called owner draws. In S-Corp world, it's called distribution, but you can take money out of your business at any time personally, right? It's either just writing a check to yourself, or the other option is that you can just transfer money from your business to personal bank account. So you can do that at any time. So when I had an S-Corp, what I did is I had my salary was not enough for me to live off of. So my my payroll ran the same day that an automatic transfer out of my business ran. And that the two together is what made up my living expenses. So one thing to keep in mind is that the salary is not meant to be everything you're living off of. It's really more of a tax strategy, because you can take out these distributions as well. And then we have fringe benefits. That's more the side of it with the accountable plan, where you can reimburse yourself for things like a portion of your home office or a cell phone or your home internet. So there's 3 ways that you're getting money out of your business. The key takeaway here is an S-Corp is still an LLC, right? It's just an LLC that's taxed differently. So I always say that LLC is like your foundation, and then the S-Corp is the tax house that you're building on the foundation. So the foundation is still the LLC. When you're an S-Corp, you are still an LLC. Okay, so here's an example of how this can work in real life. So let's say that this person is a sole proprietor with $150,000 in profit. Well, as a sole proprietor, they're not going to pay themselves any salary, right? Because that's not something they can do. But as an S-Corp, they're going to pay themselves $50,000 in reasonable compensation. Now, what's subject to that 15.3%? Well, as a sole proprietor, $150,000 is subject to that 15.3%. And as an S-Corp, $50,000 is subject to that 15.3%. So the total tax is quite different, right? Because as sole prop, it's about $23,000. And as an S-Corp, it's about $7.6K. That's a $15,000 difference. But now the interesting thing about this is that there's still this aspect of the pass-through profit, right? So the pass-through profit for a sole prop is $150, for the S-Corp it's $100. But then when we add that S-Corp's $50,000 salary, the taxable personal income is about the same, right? So you're paying less taxes, but personally you're earning about the same, which is the really cool thing about an S-Corp. All right, so what are the differences between an LLC and an S-Corp? Well, both an LLC and S-Corp have a legal shield between your business and personal assets, right? Because remember, an S-Corp is just being layered on top of your LLC. So you still keep all of those legal protections. The business profits are still passed through to you, the owner. An LLC has self-employment tax on profits. When you have the S election, you do not pay self-employment tax on profits. But both single member LLC and someone with an S election, they both pay income tax on profits. So that's something that's just kind of there. An S-Corp the owner can pay themselves employee wages. You can't do that if you're just a sole proprietor or a single member LLC without the S election. But both of these, you can pay yourself through draws and distributions. So you still have that flexibility to take money out of your business anytime. And then one other thing when you're filing with the S election is that your business now has to file its own tax returns. So your business has to file what's called an informational return, and that's something that's required. So let's talk a little bit about some pros and cons. So the LLC pro is that your taxes are simpler and you have less paperwork to file, right? It's like you don't have all these extra tax returns, you don't have payroll reports, you don't have all of that to deal with. But the cons is that you have to pay more taxes, you won't save as much as on retirement, and you have less control over your benefits. With an S-Corp, the pro is that you're lowering your taxes, which is usually the biggest pro for people. You also get to save more for retirement. You have more flexibility with your fringe benefits. But the cons are there is more paperwork involved with an S-Corp. You are going to have to pay more for tax prep and accounting fees. And you're running a company now with payroll, right? So there's kind of like an extra administrative burden on you. So which one is best for you? This is really what people want to know. People are probably like, that's cool. Just tell me if this is something I should do or not. So an LLC is best for a business with very little earnings. So if you're earning less than $80,000 a year in profit, an LLC is still probably a very good fit for you. And an LLC is good for people who just want a simple, straightforward tax structure, right? They don't want to deal with all this reasonable compensation stuff. An S-Corp is best for people who are earning $80,000 in profit per year or more. So once you hit that threshold, you really want to start thinking about shaking up your tax strategy. It's good for people who are really into like saving aggressively for retirement. If you're into like FIRE movement, all that good stuff, then an S-Corp is really going to benefit you. And it's best for people who have the cash flow to make those regular payroll runs, because again, that is something that you're required to do. Okay, so let's talk about how to operate your business. So what do you need to do to get set up? What do you need to do to maintain the S-Corp? All right, so there's 3 steps to starting out your S-Corp. First, you're going to create an LLC with your state. So if you do not already have an LLC, you're going to have to register an LLC, right? That's just something that you will have to do because again, a sole proprietorship does not have tax flexibility. So you can't ask to be taxed as an S-Corp as a sole proprietor. You're missing that step of being an LLC. Now, if you're already an LLC, then you can move on to the next step, which is to get an employer identification number. You're going to need this in order to file the S-election and also set up your payroll account. Then you're going to file the S-election. The S-election is just a fancy way of saying you're going to file a form asking the government to tax you differently. And then you'll have to register for a payroll account, because now, once you have that S-election approved, you will now need to pay yourself as an employee. So you'll have to get set up as an employer. So that's step 1, is kind of like getting all of this stuff together, right? Like you got to set up the LLC, you got to send the right paperwork in, you got to get yourself set up with the right accounts through your state. Then you need to set up your tools. You will need to seriously invest in bookkeeping as an S-Corp, because your accounting will be under more scrutiny. And also there's just more going on, right? We're talking about these like accountable plans. We're talking about like fringe benefits and retirement and payroll taxes. You will need to have an accounting tool. We recommend QuickBooks Online. Collective memberships come with a subscription to QuickBooks Online, so you don't have to pay for anything extra. And then you want to set up a payroll processing tool. Processing payroll by hand is a nightmare. Please don't do it. Please use a payroll processing tool. It automates it. It makes things easier. It figures out all the math for you. It sends in all the right paperwork to the right agencies on a quarterly basis. If you're trying to do that on your own, you will be buried in paperwork. Our favorite payroll processing company is Gusto. They are fantastic. We are partners with Gusto, and actually Collective membership also comes with a free Gusto account. So you'll have your QuickBooks and your Gusto all taken care of. And then you need to set up the money flows, right? So you need to make sure that you have a business, bank, and credit card account. So at this point, we really need to stop commingling our business and personal finances. They have to be really separate when you've gotten to this stage. And of course, you just want to change any expenses and customers over to these new money flows. In terms of ongoing operations, you're going to need to file, right? So we've talked about this. You're going to need to file your business and personal tax returns. You'll need to file your payroll returns. Now, if you are working with a company like Gusto, they will file these automatically for you. It is magical. It's really, really cool. Highly recommend using payroll software. You're also going to need to maintain your entity on an ongoing basis, because remember, you will always be an LLC, or you could also be a C-Corp with an S-Corp election. So you'll have to file your statement of information with the state. You'll have to maintain meeting minutes and notes. And finally, you're going to have to keep up your books and records. So again, you do need to stay on top of your accounting. So you're going to maintain your books monthly, and also you're going to pay your distributions and bills. So I would love to hear from everybody here. Are you thinking about switching to an S-Corp? I'm going to take a sip of tea, and you can put in the chat if it's a yes or a no. I also see lots of questions. So I'm excited to answer. Wow, so many people are in the S-Corp club. Cool. Well, yeah, I mean, definitely for tax savings. Oh, Noreen, I currently have one, but didn't understand it for the past 4 years. Well, I hope that this webinar helped you with that, because I definitely, it's so cool. There's so much cool stuff you can do with an S-Corp. So I hope you're like, excited. All right, so let's talk about, if you are thinking about switching to an S-Corp, let's talk a little bit about how Collective can help. But before I talk about how Collective can help, I just want to talk a little bit about the folks that we work with. So Collective is currently available in 10 states. They're California, Washington, Utah, Arizona, Texas, Florida, Georgia, Massachusetts, Virginia, and Pennsylvania. So if you live in one of these states or your business is in one of these states, we can definitely support you. And then we work with 3 types of entities. So we currently work with sole proprietors, single member LLCs, and existing S-Corps that are LLC based. So if you are already an S-Corp, but you formed as an LLC originally and then filed the S-election, we can work with you. We don't work with multi-member LLCs, partnerships, or C-Corp based S-Corps or C-Corps. So how do we help, right? Well, this is your S-Corp finances without Collective. And this slide looks a little bit different from the slide in the beginning because there's just more stuff going on, right? Like we said, this entity, this tax structure is really amazing, but there is a little bit more happening, right? So we have your setup, we have ongoing state compliance, we have taxes, and you'll notice taxes now, you have your S-Corp return and your personal return. We have estimated tax calculations and reminders. So this is something that's interesting, right? With the estimated tax calculation and reminders, this is something where we had this earlier. So this isn't changed. As an S-Corp, you'll still have to file those estimated taxes. But now we have payroll service and reasonable compensation, right? So there's a little bit more going on in your finances. Your S-Corp finances with Collective, right? So again, we're moving all of this into one centralized platform. You have a team of financial experts that is working with you on all of these different aspects, because you have the compliance side of things, you have the payroll side of things, the reasonable comp, the bookkeeping, the tax strategy, the taxes, filing them, right? You have all these different things that now there's a team of experts that are all in one place working on your finances. So here's what to expect your first year at Collective. So we have the S-Corp formation and an election. So what we do is when you join Collective, if you are not already an LLC, we will form that LLC for you. So we will help you with all that state paperwork, we'll get at that LLC side of things set up, and then we will file the S election. So if you're a sole prop and you're going to an S-Corp, you don't have to do all that state work yourself. We'll do it for you. If you're already an LLC and you have to file we will file that paperwork for you. We will also obtain your EIN. This isn't listed here, but we'll also help you register for your payroll account in your state. And then we offer guidance on your retirement planning, health insurance, and reasonable compensation, and how to really leverage this inside of the framework of having the S election. Then you move into phase 2, which is bookkeeping setup and catch up. So I mentioned earlier that Collective comes with a subscription to QuickBooks Online. So we actually set up QuickBooks Online and Gusto for you. So these are included in your membership, and we do all the setup for you and with you. Then we do a year-to-date bookkeeping catch-up. So if you're like, my books are kind of a mess, or I haven't really done anything, we will catch your books up for you. We'll make sure everything's categorized correctly. If you've been kind of doing your bookkeeping and it's like kind of a mess still, and you're like, I don't really know, we will also clean up your messy books. We'll offer some bookkeeping training. We'll help you set up your first payroll. So from there, you won't have to do a lot of work to pay yourself every month. And then this is one of my favorite things. Our accounting advisors, actually, once they get all your bookkeeping caught up, they're going to run a profit and loss and teach you how to read and analyze it. Because we do really believe that you need to have ownership and agency over your finances. So it's really cool that you're going to learn how to read that. And and the cooler thing is that your information on that report, that first one that you run with them, will be up to date. It'll be clean and it'll be accurate. So you're really going to get a full picture of your financials. Then we move into the ongoing back office support. So we have monthly bookkeeping reviews of your QuickBooks and categorization support, right? So basically, if you're having trouble categorizing things or you're falling behind, our bookkeeping team will help you. Every quarter, we send you estimated tax calculations and reminders. So we will project what we think your annual tax bill will be. And then from there, we'll project what we think your estimated tax payment should be for every quarter. And we will send that to you every quarter prior to the estimated tax deadline. We'll also support you with reasonable compensation adjustments, reminders to file important state paperwork, so all that compliance stuff we've been talking about. And you have a personal financial team that you can message with questions and for advice anytime, right? So you have a single point of contact that's a real person that you'll be able to send your questions to. And if it's something that they can't answer, maybe it's a really specific tax question, they will know who your tax advisor is and be able to get that answer for you from them. And then we have taxes, everyone's favorite thing. So Collective files your annual tax preparation, and we do federal and state for both your business tax return and your personal tax return. So it's actually a lot of tax returns because that's 4 tax returns, right? Because you have to do it for business, federal and state, and personal for federal state. So with Collective, again, it's like that all in one place. Like you get your business taxes filed, your personal taxes filed, everything is filed by the same people who really know and understand your business. All right, so Collective costs $199 a month. It's an ongoing subscription. You can cancel anytime if you wanted to. There are no setup fees. So I know it's kind of confusing. People are always like, but you're like setting up my LLC. How much don't have to pay you separately for that? But there's no setup fee. That's all included. And then it also includes a QuickBooks Online subscription and a Gusto subscription. So if you were to just go pay for those on your own, that would be $65 a month, right? So $199 a month, but you're getting a $65 monthly value just for the tools alone. All right. So what we want to do is we're inviting folks who are on this webinar, especially folks who are in the states that we work with and who are the structures that we work with, to schedule a call with one of our tax advisors. So if you've been watching this and you're like, oh, S-Corp seems amazing, but I kind of want to talk to somebody else or talk to somebody one-on-one and not just make a decision off of a workshop. We are inviting you to schedule a call with one of our tax advisors. We're going to drop a link into the chat. You can also use this nifty QR code. And super amazing, if you join Collective by November 30th, you're going to receive 2 months free. We like never do this. We've never actually done this before. So this is really amazing. But in our minds, what we're thinking is like, how cool would it be for people to like not, basically get 2 months free and roll into the new year, because we're already in November, with all their stuff set up. So you go into January 1st of 2022 with everything taken care of. You had 2 months free. It's really, really amazing. And then the other cool thing is that you guarantee filing of 2021 tax returns. So anyone who joins by November 30th and really the end of the year, we guarantee that we can file your 2021 tax returns. So even though you're joining like November, you haven't been with us all year, we will still file those returns for you. And you can get all of this with the code PEA. So when you talk with the tax advisor, just tell them that you have this code. You can say, oh, I was at the webinar with Parsons Entrepreneur Academy. It's the code PEA, and they will let you know the next steps to use that code. So I'm going to stop for a moment because I know Carly Ann has a few things that she wants to talk about as well. So I'm going to stop sharing. I'll bring back this slide when Carly Ann is finished, but I'm going to punt it over to Carly Ann.
All right, thank you so much, Andi. So we're gonna get back to the Q&A session that we promised. So I will kick it back to Andi after updating you on another offer that we had. So you can use the code PEA to claim the offer that Andi just gave you all via the QR code and via the link that we've dropped here. But you can also use the code PEA for Andi's course, How to Manage Your Money and Create a Budget, which goes in depth on a lot of the different things that Andi touched on. So the different entities, again, how to like manage your money and budget. So if you go to our website, you can check out our catalog of courses. We have a lot of amazing business for creative courses, and the code PEA gets you 50% off of Andi's how to manage your money and create a budget course. And that offer will last until November 6th. So you have a couple of days to redeem that if you're interested in taking that course, but it's a great way to brush up on finances and budgeting as a whole, and center what you just learned about taxes and S-Corps within that. So you can find all the information here in the chat, and I'm gonna kick it back over to Andi. If any of this is confusing, because I know we just said a lot, please feel free to ask questions. But that one code PEA, it's going to work on the collective offer, which if you use it before November 30th, you will get the first 2 months free. If you miss that window, the code gets you 50% off if you went and sign up after the November 30th date. So try to be mindful of that and sign up before November 30th. And the PEA code also works on our website for you to redeem 50% off of the budgeting course that Andi authored with us. All right, so on that note, I'm gonna hand it back over to Andi so that she can address your questions. If you have any more questions, please continue to put them in the Q&A box and vote for your favorite question.
Thank you. I just want to build on what Carly-Ann's saying, is that even if you're outsourcing your finances and you know, like say you worked with Collective, it's still really important to understand the basics of business finance, which is what that course really does. So it's not like a one or the other thing, right? Like having good financial habits is not just about taxes and bookkeeping. There's a whole lot more that goes into that in the day-to-day operations, but it also helps to outsource some of the harder stuff like taxes and bookkeeping to somebody like Collective. So yeah, I'm seeing a lot of questions, and I think that this has been upvoted. So I'm going to answer this one because there's actually like variations of this question in the chat, which is about Collective being available in New York. I saw Oregon, Illinois, like there's a lot of different will Collective be available in my state questions. So Collective, we are planning on expanding to more states. So we will let you know. What I recommend that you do is if you are not in one of the states that we serve, I'm actually going to put a link in the chat. I recommend that you go in through our tax calculator here. That will help you see if Collective is a good fit for you and your business in general, and if an S-Corp can save you money, but it'll also add you to our wait list. And then the cool thing about that is that when we are available in your state, trust me, we will reach out. I manage all the content and emails for Collective, so I definitely will let people know when we are opening up in new states. There's also some questions about, can we join Collective if we aren't in the state that you serve? And unfortunately, we cannot. I saw a question about, somebody asked about if we help with like this, getting like all the licenses and all the paperwork filed that you need for an LLC. We help with the paperwork side of things. I don't know about like what your licensing requirements are, but that's definitely something that a tax advisor can help you more with. And then there's another question about if you can use Collective services for S-Corp prep and then actual tax prep without using the services during the off period. And it's a monthly subscription, so the answer is no. And a big reason for that is that the reason that we give so much bookkeeping assistance is it actually helps ensure that our tax prep team can accurately file your taxes, which is why you are then like paying throughout the rest of the year, because there's a lot of back end work that's happening throughout the year that isn't as visible as like a tax return, but we are like sending those estimated tax calculations, and you know, we start those early. Like it takes time to prepare all of those. So it is still a monthly ongoing subscription. Okay, so let's get into some of these questions. Someone asked, so you still have to pay taxes if you're not making a profit. No. So if you do not make a profit, the loss passes through to your personal tax return. And if there's nothing to tax, like you have no personal income, there's nothing to pay self-employment or income tax on. After forming an LLC, is there a time limit on requesting to be taxed as an S-Corp? There is no time limit. So you can ask to be taxed as an S-Corp whenever you want. But one thing to keep in mind is that what we call the S election will only go back so far. So you can't necessarily, I mean, it kind of depends on your unique business situation. So it's hard because I don't want to be too general because it can be different for different people. But basically, when you ask to be taxed as an S-Corp, generally the election will only go back a certain amount of time unless you ask for it to, you appeal for it to go back further. So in this case, yes, you can form the S-Corp, you can ask the S-Corp election any point in time that you want. I mean, you can be an LLC for 5 years and then be like, I think I want to be an S-Corp election now. And that's totally fine. It's just how far back in the tax year it's going to go is going to vary. Is healthcare deductible in an S-Corp? Yes, it is. So your owner healthcare, your health insurance gets run through the S-Corp as an expense, and then your S-Corp writes that off. But it does also add the premiums paid to your W-2. What is the difference between an S and B? Do B Corps have the same tax benefits as an S Corp? So a B Corp is kind of an interesting one because a B Corp, which is so B Corps also are formed under your state. And then there's also getting the B certification. So there's kind of like a lot going on with B Corps, but basically your state will decide if B Corps get any tax benefits or not. From a federal level, B Corps do not have any tax benefits. So a B Corp is kind of like a layering on to already what you're doing. So in the eyes of the IRS, like you can be a B Corp, but they're still going to tax you however your like root entity, your root entity structure is. So sole proprietorships can be B Corps too, right? And then certain states will have different, rules around B Corps, but essentially you are still like taxed as your like root foundational entity, if that makes sense. And then getting the B Corp certification, the B certification, the B with the little circle, that doesn't have an impact on your tax structure. Will Collective be coming to Oregon? Someday, I hope. I don't know all the when we're coming to what state timelines, but we are planning on expanding. Are the tax rates applied after you reach certain amount income levels, or does it automatically apply on any amount of self-employed income? Yeah, so the way that you move up and down tax brackets is based on how much income you have. So again, it's not all the income from your business, it's all the stuff that's factored in to the income tax side of things. So that big long chunk of paragraph that I had up, that basically is going to determine which bracket you fall into and that threshold, and if you've met or surpassed certain thresholds. How often do you have to pay yourself wages for S-Corp? So we recommend monthly. Monthly is best practice, but people can do quarterly, but we really recommend for like cash flow and compliance purposes to pay yourself monthly. It's just easier from a cash flow perspective of being able to pay yourself monthly. It's easier to come up with the money for a payroll run, every month versus like 3 times a year or 4 times a year. What is the process tax form we need to fill out to become an S-Corp? I tried reaching out to the IRS and they were no help. Yeah, so, oh my God, I used to know this off the top of my head. Let me find the form number for you. So it's form 2553. I think I always get like one of the 3s mixed up. So form 2553 is the form that you file to ask the IRS to tax you as an S-Corp. Can you conduct multiple businesses within single S-Corp, for example, photography and fashion design business by the same person? So this is a hard question to answer because this is really going to come down to business activities and what can fall under a single LLC or not, and if they're similar enough and they have enough crossover. So this is one of those questions that you'd need to talk to a tax professional about because it's just like too nuanced to really say if it can fall under a single, one LLC that's electing as an S-Corp. I'm considering creating an S-Corp in New Mexico, which leaves a gross receipts tax. How would that extra 5%-ish play in? You have to pay it as a sole proprietor too. Honestly, Jamie, I can't answer this question because I don't know enough about New Mexico's tax structure to be able to give you an answer that would be in integrity. My recommendation is to find a tax professional in New Mexico and really talk through this. Any accountant or tax professional like that is well versed in self-employed and business taxes should be able to really should be able to give you clear guidance on S-Corps. Do you feel there is a similar income threshold to determine from going to a sole prop to an LLC? So there's no income threshold from going from a sole prop to an LLC. It's really about if you want that legal protection or not. And that can be based on a lot of different things. It can be based on, you know, what is your personal asset situation? Like, do you have a lot of assets that you want to protect? Or are you like, I don't really have anything worth protecting, which I've worked with people like that. They're just kind of like, I don't want to deal with the headache of all the paperwork, right? And then the other thing you want to think about is like how risky your business is. So is your business and your business activities like very high risk where you would want that extra legal protection? Do you have like pretty like low or moderate lit risk? Those are the types of things you want to think about with like going from sole prop to LLC, because again, it doesn't actually impact your, it doesn't impact your taxes at all unless you're filing the S election. I am an S-Corp and C-Corp. I am operating as sole proprietor and not making the money we did when we formed the company, not paying payroll tax now since not making a profit. I asked my accountant about shifting to an LLC and she said to keep the C-Corp. What are your thoughts on this? So unfortunately, Jewel, like I don't have enough context about your business and there's so many like follow-up questions like revenue, expenses, like long-term plans, what you know, that it's really hard to say. One thing I can tell you is if you are, so you're an S-Corp and a C-Corp. So one thing that I will say is that you can change your tax structure. So you can ask the IRS to change the way that you're taxed. Although in this case, it seems like you want to go back to sole proprietorship taxation, which would probably look like having to dissolve and then like reform as an LLC, which might be why your accountant's saying, you know, this may not be a good fit because of the amount of work involved with it. But yeah, unfortunately, Jewel, I just don't have enough information to give you like an answer that would be in integrity. Is there a point where the S-Corp doesn't make sense creating a savings because the business is making too much money? There is. I would say when people start to hit 7 figures, it's time to reassess tax structures and tax strategies. So a good way to think about it, if you're like looking for an easy way to remember, 6 figures, reassess your tax structure. 7 figures, reassess your tax structure, right? So every time that 6, 7 number goes up, start reassessing your tax structure. What if you are registered as a C-Corp? Does that give you better tax benefit than an LLC? Well, you're still being filed under the rules of an S-Corp, right? So you're still being taxed under the same rules. It's just more around like the paperwork side of things. And these are decisions that really, again, it's hard to say without knowing your business. Does monthly fee for collective include tax filing? It does. So there's no extra fees. So you're not going to pay anything extra with collective. It's kind of like that $199 a month is the $199 a month. I answered this, but do you help file starting licenses, et cetera, along with LLC? So we help you file anything that's related to the formation of the LLC, but we don't help you file like if you have like specific professional licenses, you need to file for your profession or state. Can I change my single member LLC to an S-Corp for the profit I've earned this year? This is a really tricky question because it's super dependent on your business itself. Joe, if you think this is a good fit, I'd recommend talking to one of our tax advisors to see what's possible because it's just hard to answer this question without knowing enough about your business. One thing I will say for folks who are asking about, can I switch now? Can I switch now for the all the way up to like the beginning of the year, is that you do have to keep in mind that you're going to have to, if you're going to elect from January 1st, then you're also going to have run the payroll necessary to make up that entire year. So often it's hard for people because they don't have the cash on hand to make a payroll run this late in the year that would cover an entire year of what your salary should be. I've operated as a freelancer all year without an LLC or S-Corp. Can Collective help me figure out my taxes for the year and get me set up business starting January? So we can, Felix, yes. So yes, if you're a sole proprietor and you've kind of just been operating as is, we can definitely help you. This is a good thing to talk to a tax advisor about. If I formed an LLC after having retired and are currently receiving Social Security medical benefits, are you still paying the 15% tax? So my understanding is, if that's business income, that's business income. So, you're still going to pay tax on that. But I'm not quite sure actually if you're receiving benefits. So that would be a question I would punt over to a tax professional. How many minutes notes do you have to take for an S-Corp? You need to do an annual meeting with minutes and notes. So it's an annual thing. Is an S-Corp only a good idea if you're a single member LLC, not a member, multi-member? No, multi-member LLCs can also be S-Corps and the tax structure is the same. So it's still a good idea. It's just that most people, when we are talking, because Collective really focuses on businesses of one and solopreneurs. So for the most part, most people are single member LLCs. So we talk about that more, but certainly a multi-member LLC could form an S-Corp and still have the same tax benefits. How are distributions taxed? So distributions are not taxed because remember, all the profit from your business is passed on to the owner or owner's tax returns. So it doesn't matter if you take all the profit out or none of the profit out, it's still going to pass through to you. I said this earlier today in another event. It doesn't matter. It doesn't matter where it lives. It just matters when it was earned. So if you earn that profit, whether or not you take every single last cent out or you keep every single last cent in the company, if you earned it, it's passing on to your tax return and you're paying taxes on it. Can you elect to be a tax as an S-Corp if you are a single member corporation and not an LLC? Yes, a C-Corp can also elect for S-Corp taxation. Can you switch at any time or only when you first establish your LLC? You can elect to be an S-Corp at any time. So yeah, you can definitely elect whenever it feels right for you. And this is the good thing about it. A lot of people are like, oh, I can't do it yet. And it's like, it's okay. Like now you know, and you'll be proactive about it when you're ready to, or you have the right, profit numbers. Can an S-Corp be an umbrella for subsidiaries? Well, remember, an S-Corp is an LLC. So LLCs can own other LLCs. I answered the question about Illinois. I answered the question about joining if you're not in the state. Another question about can you backdate your S-Corp application as I've not filed 20 or 21 yet. Again, that's going to be like really dependent on your situation. A big piece of that is the payroll piece, right? It's being able, it's like you should have paid yourself $60,000 in salary. It's being able to make that pay. If you're going to backdate to the beginning of the year, you have to be able to make a $60,000 payroll run by December 31st, which means you have to have the cash on hand for that. What happens if your S-Corp doesn't make any money? What happens to your taxes? If your S-Corp doesn't make any money, you have a loss, then that loss passes through onto your tax return. How can I find out what I can reimburse myself for? So I think you're talking about the accountable plan, so I'll just tell you. So you can reimburse yourself for miles that you drive with your personal vehicle. So you can do like a mileage reimbursement. You can reimburse yourself for like travel per diem. So if you want to do like a per diem while you're traveling, you can do that. You can reimburse yourself for your use of your home office. Generally, the way that we advise doing like the home office reimbursement through an accountable plan is just treating it the same way that the home office deduction works for sole proprietors, which is basically taking the square footage of your home office versus the square footage of your home, the percentage of that. And then you would just, so let's say your home office is 200 square feet, your home is 1,000 square feet. Basically, that means that the percentage is 20%. And then every month you would invoice your S-Corp for that 20% of all your home expenses. So it works really similar to the way that the home office deduction works for sole props. It's just that you're not filing that with the government, you're actually getting reimbursed from your S-Corp. And then the other two things are home internet usage, right? So if you're like, oh, 50% of my internet I'm using for my business activities, 50% of that would get your monthly bill would get reimbursed by the S-Corp. Same with personal use of cell phone. I'm only 1099 real estate, so I don't have checks every month. How would payroll work on a month there is no 1099? So we can help you with that, Lori. We actually just opened up to working with real estate professionals. I think our product now supports folks who have sort of like more real estate based, like cash flow, which is like some months there is some and some months there isn't. So yeah, that's something, but basically you would either still try to project and annualize the payroll, or maybe you'd run like on a quarterly basis. Can you talk a bit more about the $80,000 threshold and why it may not make sense if you have less than 80K? Yeah, this question comes up a lot. So, we've talked a lot about S-Corps. We talked a lot about there's like extra tax returns you need to file, right? There's a lot of extra stuff you need to do as an S-Corp. And so what ends up happening is that when you form an S-Corp, there are more expenses just by the nature of the things that you need to be sure that you're staying on top of. And so what we see is that where it really begins to like have the types of the significant enough tax savings to offset those additional expenses is at about 80K. Right? Because at that point, you're really seeing, it's like that tipping point of where it's worth all the extra work, the extra money, the extra time, because you're going to get like basically your return on investment in the election is going to be greater. So that's what we've seen, with our work at Collective. We have a lot of folks that we work with, and we just noticed that that's really the point where it tends to make the most sense. All right, last question. Very cool. Thank you everybody for asking questions, being so engaged. I hope that this was, helpful for you all. It was great to see everybody so excited about S-Corps in the chat.
Well, again, do you have any other webinars or YouTube videos? You really make it easy to understand. So, Joe, if you join our network, which Chelsea can drop a link to our network. There are 2 webinars that Andi has done in the past. So one on QuickBooks for Creatives and one with a section from her course, how to manage your money and create a budget. So you can find those webinars in our archive, actually, that Andi's done before on those 2 subjects. If you wanted to like dig in a bit more, and that webinar will also like give you like a good grounding on the basics, and you can also get a sampling of what's in that budgeting course. So so check out the link that Chelsea just dropped in to join the network, and you can find an archive of all of our past webinars, including the 2 previous webinars that Andi's done with us. So there's one specifically that's like an extract from the budgeting course. So if you click on that one and watch it, there's a lot that Andi goes through on taxes and entities and all of that.
Yes, talk about this stuff a lot. Well, thank you all so much.
Thank you again, everyone, for joining us. We hope to see you again at our other events. Check out our website and all of our stuff. And if you ever have any questions about PEA, you can email us at pea@newschool.edu. All right. Thank you, everyone. Thank you, Andi.
Bye.
Bye.